Everybody, and welcome to the 10th edition of LM's Weekly Wrap, our weekly report on the developments which have taken place in the domestic markets, the international markets, the repercussions of the various developments in the markets, and what is expected going forward into the markets. As usual, with me is Jash, who's the Senior Equity Research Analyst with LM Securities. He is going to brief us about the macro developments, both at the domestic as well as the international level, which will be followed by company-specific developments and micro developments from my side. So, Jash, it was a very eventful week.
I agree.
Yes, kindly...
Thank you so much. Welcome back, and it's great to be back here in front of you to give our comments on the week, on the passing week. So, as on last Friday, we had said that to be very cautious on building your positions, as we had the Fed meeting on Wednesday. So the market was very confused. It was going sideways, it was going up and down. But what was alarming is that Putin's threat of nuclear, that is a sign of real threat, and he's also going to deploy reserve forces in the country. Following that, there was a dovish view of Fed of increasing 75 basis points, which was already accounted for. But the bigger problem is that the Fed is going to increase the rates by 4 to 4.6% by the coming year. So we see another steep rate increases, and that is what wasn't taken well by the market. Along with that, Japan, the dollar to yen has reached a new 24-year peak, as Bank of Japan remains dovish. This is another sign of concern. We see the whole world going into recession and growth is dipping. On lines with that, Swiss has broken the sub-zero levels of European rates by increasing 75 basis points, and even Bank of England has increased the rates by 50 basis points. So all we hear and all we see is the signs of growth depleting, the recession fear still being there in the market, and which has led to the market going down. Especially today, we've seen the Indian market going down by almost 2%. That is, I think the market is spooked by the weak rupee. The rupee has hit an all-time low of 81.2 rupees today morning. So I think the market is very worried about that. In terms of that, I think going back to the American markets have also given commentary on the growth being only 2% for this year. I think that is what is leading the negative side of the market. Again, coming back to the silver lining, crude. The lower crude price has been a boon for India. It being at $90 is the best news that India has right now. As the highest, we import crude at the highest level in India. So all of these factors being in place, I feel we should still be very cautious on how we build positions. There are more downsides to see, as even RBI will be increasing rates, as they need to manage the dollar and rupee ratio. And I think with this, I'm going to hand over to Nirav sir for the comments on the sector specific in stocks.
Yeah. Thank you, Jash, for those valuable insights. And as rightly pointed out by Jash, we've seen a lot of volatility in the previous 1 week, the last week. The Putin's comments, definitely they spooked the markets on the political front, and on the economic front, of course, the US Federal Reserve clearly indicating, as in the past they have said, that they are ready to sacrifice growth for the sake of price stability. So for the sake of price stability,
I think they are expecting a soft landing by doing these rate hikes, but I don't think there is any soft landing over here.
It becomes difficult to manage, but they have maintained a very, very hawkish stance, and they have said that they are looking at a bleak picture as far as the employment scenario is concerned, as far as the growth in the economy is concerned. So all these red flags are definitely there. The economic growth is going to be very meager, very lackluster in the next couple of years. But they have maintained the view that price stability is of utmost importance and of paramount importance. So that's the view from their side, and I think the repercussions of that is that the US dollar index is at a record high, and it's likely to hit 112 levels and 114 levels quite soon. At 114 there is a resistance too. The 10-year benchmark bond yield has also hit 3.7%. So I think the bond yields have started shooting up, and consequent effect we have seen on the Indian rupee, which has hit an all-time low. So to sum up the things, today's fall, the free fall which we had in the rupee, is kind of making the markets nervous. It's really made the markets nervous, and we've really kind of negated or given up a lot of gains which were there in the markets.
I think in the last week we've seen the market has become fearless, but I think that was short-lived.
Yes.
Market cannot be fearless for a very long time.
Yes, so the idea behind all this is that there's sooner or later there is going to be a reality check in the market. Very soon the markets are definitely going to take into account the fact that valuations are looking stretched at some point of time. So all these concerns are going
Correct.
to prevail.
And that is exactly why we keep saying to keep big booking profits at every point.
Yes. One important factor to take into account during the midweek also we had discussed that cement stocks had a very kind of a dream run following Adani's acquisition of ACC and Ambuja, and then we had seen a strong recovery in the cement counters. But it's very important to note that cement at the end of the day is a commodity, and how we are going to manage the cost pressures, how we are going to manage the input equation, that is of utmost importance. So we've seen the kind of correction in the cement counters. Slowly the reality check is coming into the cement counters. And what is making the market participants nervous is that the incumbent players, the larger players, they are feeling the heat of the disruption which is likely to take place in this sector. So one of the stocks which has corrected quite heavily in the last 1 week, or which has seen some pressure, which is feeling the heat, is Ultratech Cement, and of course followed by Shree Cement.
I think Ultratech Cement, I think it was feeling the pressure because of its number one position being taken away in the next 2 years. But I think that is to be discussed in the times to come though.
So we have to wait for the valuations to come at the right place before we start taking exposure to all these cement stocks. At least we are in the wait and watch mode, or at least in the sell mode as far as the mid-cap cement counters are concerned. That is one. We've seen good movement, good traction in FMCG counters, as we had pointed out in the midweek also. And I think the stars which really shone in this week were HUL, Britannia, and ITC. HUL, because HUL is using a lot of artificial intelligence. It's using machine learning. It's using a lot of technological tools in order to reconfigure their entire supply chain. So they're working on they're improving their supply chain in a very, very big way. And they have indicated very, very clearly that apart from brands, people, now data is going to be one of their biggest assets. So they've been now betting on three important parameters in order to manage their business. And they're working on different strategies like Reimagine India. They're working on a strategy called WIMI, which is winning in many Indias. So India it's like a continent, and different parts of the country have different tastes, and HUL wants to cater to that taste. So market is now realizing the potential of this script, and I think one of the biggest gainers in this week. We also saw some good momentum in Britannia, because the cheapest method of snacking in this country is having biscuits, and Britannia tends to earn its majority of its revenues from the sale of biscuits. ITC, needless to say, I think is a dream run, and I think lot of steam still left in the ITC counter, because it's firing on all cylinders, whether it's tobacco, whether it's cigarettes, whether it is agri commodities, whether it is paper, whether it is paper boards, whether it is FMCG business, or whether it is the hotels business.
Hotel is the favorite of all in the last few weeks.
Yes. So I think ITC, HUL, Britannia are no-brainers. Apart from this, we had also discussed about pharma. Pharma is making a comeback, and today also pharma has not disappointed. We've seen good gains coming through in the market leaders like Sun Pharma, Cipla, and Dr. Reddy's Laboratories. Now, with the kind of improvement which we have seen in the pharma sector, we feel that Cipla is poised to show a lot of improvement in its performance in the coming couple of months. So watch out for that stock. We are expecting some good improvement in the pharma numbers also. On the flip side, I think the sector which has borne the brunt, or which is facing a lot of flake, is the IT sector. Most of the frontline IT stocks, whether it is Infosys or TCS or HCL Technologies, Wipro, are now close to 52-week lows. Yesterday, the developments with respect to Accenture, whatever guidance they have given, has also not particularly enthused the markets. So a lot of negatives coming as far as the IT sector is concerned. So IT sector, mid-cap IT is suffering from a different set of issues. The valuation concerns are there, etc. So IT is likely to remain under a lot of pressure. We've seen auto, which continues to do well. I think Maruti, M&M, Eicher Motors, these are the front runners. Escorts Kubota has also done quite well. So auto sector continues to do well, and finally to wind up, the consumption theme still looks quite good. We could see some good developments happening in the hospitality space, and we could see some good pickup happening in the defense space as well. Defense continues to do very well. With the national logistics policy having been announced in the previous week, I think we could see some good action happening in the logistics counter also. And railways, which are going to spend a big chunk of money in the near future on modernization, on various projects like Project Raftar and Kavach, etc. Our railway stocks are expected to do well. So can they definitely have a look at stocks like KC International or HBL Power Systems, or the likes of Titagar Wagons, Texmaco, Texrail, as also the PSU companies, quality PSU companies like RITES, Rail Vikas Nigam Limited, IRCTC, Railtel, etc. So railways is a theme which is looking very, very exciting. Lots of other ideas, but paucity of time. So we'll kindly revert to us with your feedback, how you feel about our program, and we will reply to you. So I think that's about all from our side. We will catch up with you in the midweek, and as well as the next week's weekly wrap. And to conclude, I think Jash has one announcement to make. So Jash.
I think a lot of viewers are waiting for this announcement. So we were running a contest in which you win a 500 rupee Book My Show voucher, and I'm here to announce the winner, and it is Mr. Shreyash Rao. Congratulations on winning the contest.
Congratulations, Shreyas. Thank you everybody for a patient listening. Thank you.